TSLY, or the Yield Max Tesla Option Income Strategy ETF, is an option income styled ETF that utilizes a synthetic cover call strategy on the underlying Tesla stock and is able to distribute a ton of dividend income from doing so. Now in this video, we're going to dig a little bit deeper into TSLY, and we're going to talk about things like total return, the distributions that have been paid to investors so far, and then later on in the video, we're also going to talk about how long it would take an investor in theory to turn $1,000 into $1 million if they invest into something like TSLY. Now make sure to stick around because some of these numbers are going to shock you. I just finished my brand new dividend investing ebook where I share exactly how I went from zero to now over 7 figures invested, and also on how I earned more than $6,000 per month in dividends. I also finished my custom dividend tracker that you can use to track your dividend income progress on an ongoing basis. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. But just to go over some of the basics first, like I said earlier, TSLY is an option income strategy ETF. And right in the fund overview, it says the Yield Max Tesla Option Income Strategy ETF TSLY is an actively managed fund that seeks to generate monthly income by selling writing call options on the fund's reference stock, which is Tesla, TSLA. TSLY pursues a strategy that aims to harvest compelling yields while retaining a cap participation in the price gains of Tesla. Now, some more very important facts about TSLY are things like the inception date, which this ETF has only been around for around a year. Also, I think it's important to note that this ETF does have a very expensive gross expense ratio of around 1%, and that's partially, of course, because this fund is so actively managed. It is going to cost a little bit more to hold on to this ETF. Now, before we go through TSLY's price return or lack thereof since this ETF's inception, let's first look at some of the positives of this ETF, the distribution details. Now, the most recent distribution that was paid just as of recently was over 40 cents per share, which is down compared to the last few, but keep in mind an ETF like this is going to pay a different amount of dividend income to investors on a consistent basis, depending on what happens in the market, and of course, depending on how Tesla trades within a monthly time frame. But even still, a 40-cent dividend for an ETF that costs under $10 right now is not bad whatsoever. And the distribution rate for TSLY as of currently isn't as high as it used to be. It was like close to 70 or 80% not that long ago, but still at 54+%. It's honestly still a head turner. But looking back at some of the most recent distributions, the month before this last was 55 cents, then we had a 60-cent payout back in December, a 58-cent payout back in November, and so on and so forth. Now, like I sort of touched on earlier, TSLY's distribution is going to depend on things like volatility and how much premium is at bay when it comes to the option market. Because when there's more volatility and options get much more expensive, because TSLY, for example, utilizes a synthetic cover call strategy, the distribution within that time frame could be much juicier. But as of recently, the market hasn't had all that much volatility, and you can sort of see that within the distributions in TSLY. Now, to get right into it, the biggest main negative when it comes to TSLY, which of course a lot of investors are very upset about, including myself, because I, side note, do have a few hundred shares of TSLY throughout my portfolios, is of course the mega price decay on the max time frame when it comes to TSLY's price. Now, I get it, a lot of income focused investors don't look at this as necessarily price decay or NAV erosion, whatever you want to call it. They look at it as more or less a mechanic of what normally happens with this type of strategy. And stick around because we're going to be looking at the total return that TSLY has offered, or of course not offered, to investors in a second. But regardless, TSLY is down 57.19% on the max time frame, so however you want to cut it, and even if TSLY is paying out massive dividends, it's still not going to be enough for investors to really be ranting or raving about this ETF whatsoever. Now, I've talked about this on other videos, but in case you guys don't know, listen closely. One of the main reasons on why these style of ETFs really seem to decay over time, and inside out, this is not only TSLY, there's lots of other cover call option style ETFs that sort of look the same as this. They start at a certain point and they slowly, consistently trend down and down and down. And a lot of times you'll find this in higher yield cover call style ETFs. Now, the reason being is because when you're writing a cover call, for example, there is a capped upside potential. So if the underlying reference stock Tesla, for this example, does see a massive price increase surge, you are not going to get the upside potential fully. If you are, of course, writing a cover call on the underlying, but instead you're going to see some upside, which will be capped, of course. But on the downside, it's a little bit different. You are not going to have a capped downside. With the cover call strategy, you are going to protect the downside somewhat because of the premium that's earned, of course, but as you can see, it still isn't necessarily enough. Now, before we go through and type in some theoretical numbers in the dividend calculator, and we try to figure out how long it would take an investor in theory to turn just $1,000 into $1 million by investing into TSLY. Looking at TSLY's performance, if an investor were to have invested $10,000 into it, and this is back 1.21 years ago, back in November of 2022. The investor would have bought TSLY at around $20 per share, which now is trading at just around $9 per share. So even with all those massive dividends and even with those dividends being reinvested, the investor would still be negative 9.84% total return. And this is after 1.21 years of getting paid out massive dividends, relatively speaking. So again, not to only pick on TSLY, there's of course other ETFs out there that have also performed not so great in the same time frame, but I'm just saying that even with TSLY's massive dividends, an investor would have been better off just sitting on their hands and not buying a single share TSLY, at least over this specific time frame. Now, just for some fun in theory, if TSLY, of course, wasn't decaying in ETF price consistently like we've seen so far, let's say TSLY started to level out and just trade even sideways. And again, this is all just in theory, this is all estimated before I see you guys in my comments going crazy. But for an investor that invested, let's say $1,000 into TSLY and only invested $1 in TSLY every year after that, with a 56% annual dividend yield, which is something around where TSLY is at currently, a 0% annual dividend increase, and a 1% expected annual share price increase. Again, this is all just estimated. And if dividends along the way were reinvested, let's see how long in theory, just going off these numbers, an investor could turn this into $1 million plus. So the numbers are in year number one, the $1,000 invested would earn an investor around $728 a year in dividends, which is pretty crazy. Year number two, this investor would be at $1,600 and earning almost $1,200 per year in dividends. By year number six, his portfolio would already be almost at $11,000 with $7,500 per year in dividends. Again, just going off these numbers. Now, by year number 11, this portfolio would already be over $107,000 with almost $70,000 per year in dividends. And it would take, just going off these numbers, around 16 or 17 years for the portfolio to surpass $1 million with $500,000 or $800,000 per year in dividends. Now, again, like I said, this is just going off of these numbers. This is highly unlikely, which is why for me personally, in my long-term portfolio, I have a very small amount of money, relatively speaking, invested into TSLY. And that's simply just because even though TSLY has, at least up until this point, paid a nice dividend every single month, even the low months have been pretty big. TSLY has continued to trade down, creating more and more losses on the initial principal invested into the ETF, which again, I understand some income-focused investors don't really mind that, and there's lots of strategies around that. But for me personally, as a long-term investor, I don't personally want to be invested in something that has the potential to keep decaying more and more over time. Now with that, I'm still going to hold on to my few hundred shares of TSLY, just for the fun of it as sort of a gamble, but we're going to have to see what happens with that. But now I want to hear from you guys down below when it comes to TSLY, the Yield Max Tesla Option Income Strategy ETF. Do you personally have any shares throughout your portfolio? And if so, how many shares do you have as of right now? If you enjoyed this video, make sure to please drop a like down below and subscribe for more future content like this. Thanks as always for stopping by. And if you are interested in investing, make sure to check out these recent videos I posted right here.